Welcome to another edition of the MMK Show. Now, one of the biggest challenges that Amazon sellers face is cash flow. Now, picture this: you've launched a new product on Amazon and it's taken off. How lucky you are, right? It's taken off. You're getting sales every day, your sales are increasing, you're gaining momentum. And then what you need to do? You need to order more inventory. But guess what? If you don't have cash, if you don't have any capital to invest to buy more inventory, then what happens? You know what? Your sales stop and you go out of stock and your sales tank, right? That's what happens. Your sales tank. And then once you get your stock, maybe you go to a bank or maybe you go somewhere to get capital. It takes weeks, months. By the time you place your order for your inventory, by the time your inventory gets in, your listing is dead. There is no way that you can revive that listing. So this is a real problem that Amazon sellers face every day. And that's why we were super excited when we came across CrediLinq that is helping solve this problem for Amazon sellers globally. Now we'll talk to Deep from CrediLinq, who's waiting very patiently backstage. We'll invite him on stage and he's going to be talking about the various USPs. But one of the things that we really liked about CrediLinq is that it's not limited to sellers only based in the US. Sellers in Singapore and UK, in a lot of different countries, can actually use their credit lines, which is a huge limitation for other services that offer similar credit lines or financing options. So CrediLinq is an amazing solution. Okay, let me stop talking now. Let Deep do all of the talking. Well, Mark and Kevin, how are you guys doing today?
We're good.
Yeah, we're good, Margaret. Yeah. Looking forward to today to Deep's presentation today. I'm sure people are going to find it, some great information, and helpful.
An answer to a lot of people's prayers, especially around Christmas. It'll help them out with their Christmas stock.
Yes, that's definitely. And it's not very often that we get so excited about a service, right? And so CrediLinq is one of them. Okay, so let me invite Deep from CrediLinq on stage, who is joining us from Singapore. Hi, Deep. How are you doing?
Hi, good morning, Megla. Thank you for having me on the MMK show.
No problem.
Thank you so much for joining us.
Hi, Kevin. Hi, Margaret.
I got super excited and I was like, okay, let me just do the pitch for you.
No, appreciate the intro.
Cool. So Deep, you've got some slides to share with us. And but first of all, tell us about yourself. So you're based in Singapore and you obviously have an Aussie accent. So what's going on here?
Yeah, so I'm probably one of the unique people who represents what I call global citizenship. So I was a boy born in India, but I left when I was 4.5 years old, raised out of Melbourne. I spent a little bit of time in Sydney, but I've been actually out of Australia for the last 13 years, living here in Singapore. So, the home and the roots very much in Australia. That's where the family is. But of course, the opportunities have taken me globally. Now, in terms of my business, let me give you a quick insight there, and thank you for that quick introduction as well with respect to some of the challenges Amazon sellers and all e-commerce sellers face. And that was really the thesis of CrediLinq.ai, which is how can we embed ourselves into global e-commerce platforms and really support businesses to get frictionless and easy access to capital, because we know that data is really at the heart of being able to make credit decisions, and sometimes that data is not always accepted by banks and other financial institutions. So we've taken a very different approach to understanding client behavior, understanding what works for clients, and really taking a client-centric approach to how we underwrite.
Okay, awesome. So everybody watching, let us know where you're joining us from. And Deep is going to be sharing some slides now for the next 10, 15 minutes or so. So if you have any questions, feel free to type them in the comments and we will be addressing all questions as well. All right, Deep, so your slides are visible and it's over to you now.
Wonderful, thank you. So you raised a really interesting point, which is some of the challenges that e-commerce sellers face. Now, unfortunately, that challenge just got a lot worse. And that's because about 2 weeks ago, Amazon decided to pull out of the selling loan product that they've been actually running for 7 or 8 years. And this is a $140 billion marketplace business, and they're going to be exiting that by the end of this month in April. And what that means is that we suddenly have a huge opportunity to step in and to support. And CrediLinq starts mattering more and more to e-commerce clients and sellers globally. And one of the unique propositions we have, as you've highlighted, is that we're actually available anywhere that the Amazon marketplace is available. So therefore, if you're selling into, say, the Japanese market, or you're selling into the Singapore market, or if you're selling into the Australian or even the US market, we're actually available there to help you. And it's really about giving you the funding needs and, one, serving the underserved, and then two, helping the unserved, because there's a lot of people who haven't been able to access capital or even explore those options. And yes, Amazon is stepping out, but there's players like us that are ready to step in. One of the feedbacks we get from e-commerce sellers, predominantly Amazon sellers, is how challenging it has been to work with Amazon directly. Now, of course, it's a brilliant business. It's scaled globally. It allows us to actually distribute those great products that we feel passionate about everywhere around the world and make sales and make income. But the real challenge lies in how much of that income or how much of that sales is actually lost because of the fees that are embedded by Amazon themselves. So one of the things they've introduced is this warehousing service that you need to be able to ship the goods from at least 4 different warehouses in order to avoid the fees. In addition to that, they've also got penalties in place where inventory in warehouses starts running really, really low. Now, just think about that for a moment. On one side, Amazon is pulling out from the capital business and not providing financing. Therefore, your access to money to buy inventory goes down. On the other hand, they're saying if your inventory runs lower, you're going to be charged a fee, right? So you can really see how that's becoming a real point of feedback to us, at least from our clients, to say your solution really helps, because not only it serves one aspect on inventory and sales, but it also allows us to avoid some of these fees that are embedded within the Amazon ecosystem. Now, the reason we exist is we try to make it as simple, transparent, and hassle-free as possible. And we're actually built with the purpose of serving Amazon and e-commerce sellers globally. I want to just go through a little bit more detail as to who we are. Now, one of the biggest challenges for any business is to gain credibility, right? Understanding brand, understanding recognition, and having that credibility is super critical. And these points on the slide really elaborate on how we feel that we have the right credibility as well as the right brand to support you. We're certified by the Singapore FinTech Association. That's an important certification. And of course, we're also licensed by the Monetary Authority of Singapore. Now, the Monetary Authority of Singapore is the banking regulator, but it's also the central bank. So everything we do is highly audited and highly regulated. And that allows us to really ensure that we're providing a service to Amazon sellers that's actually pristine and equivalent to what the banking standard really is. But of course, we work a little bit differently, which is we're not going to be asking for things like income documents and bank statements. There's no guarantees or collateral associated with what we do. What we really do is take your data from Amazon through an authentication process that I'll elaborate on a little bit further. And you give us access to that data and we use that to actually underwrite. We're able to make decisions really quickly, usually within a couple of hours. And then, of course, the capital is provided to you within 24 to 48 hours as well, depending, of course, where you are. Now, what's unique about us is you only pay for what you use. Think about us as your online credit card. When you use that credit, that's when you pay. You don't pay anything to establish the line. There's no additional tricks, if you will, embedded within our fee structure. And it's a single service fee that you pay when you use it. Therefore, it means that you're really in control of how much you're actually paying and when you use the service. Now, the business is founded by myself and Vikram. We've spent a lot of time in the banking space, predominantly across large organizations. I'm actually ex-ANZ, who moved me to Singapore many years ago and spent a number of years at Bank of America Merrill Lynch. My co-founder, Vikram, spent 20 years at Standard Chartered and GE Capital. And of course, we've had the pleasure of working with e-commerce businesses in our previous lives as well. So Vikram's actually the man who set up the GMV financing product for Tmall Alibaba, right? That's a multi-billion-dollar product today. And we really took the pain points in that experience to build what we've built today. So today we finance over 16,000 merchants across 6 countries. We've dispersed over $23 million of loans, and we now support 9 Amazon markets around the world. Oh, it's going the other way, excuse me. This is, again, establishing a bit of credibility and reputation. We've come from really, really strong backgrounds across education and work experience. And what that means is that the service proposition we provide has been really tailored to a high grade and a really, really easy standard to understand. Coming into the markets that we're operating today, of course, this is a sample, but we are supporting the US, Canada, the UK, Spain, Netherlands, Indonesia, Japan, Singapore, and Australia. Of course, we have access to other markets, but these are the ones that have been the most successful for us to date. Now, I'm going to go into a little bit detail as to why we're different to banks and other fintechs. The first one is this element of control, i.e., you have the decision, and that's really focused in around when you need the capital. So some of the pain points we've heard from those 13,000 merchants we've worked with is that, oh, thank God you exist because the line is available 24/7 without commitment. So we get to choose the amount and a repayment structure. My previous bank or my previous provider gave me a 12-month term loan and I had to pay interest all the time. It had to be fixed and it was amortizing, which means I was paying it down every month. Now that was really painful because I didn't need it all the time, particularly when you think about seasonality. People are going to start restocking for Christmas around September, October. That's when you need money, not for the entire year. That's one of the reasons why we feel we provide a great service proposition. The other one is the embedded fees that get, I guess, placed into the structure. Things like origination fees, the interest charges. What means is that your annual percentage rate is quite significant. Now, within our platform, it's very clear how much you're going to pay upfront, and it's a single service fee, right? There is no additional origination charge or drawdown fee, which means your annual percentage rate remains low and very easy to understand. Now, of course, it's hassle-free,
Sorry, could you go back? Could you go back to the previous slide? I think that's very important. It's something that we should highlight. In fact, we got a few questions about this as well. So, some people in our group asked if the APR is much higher, than banks with CrediLinq. But here, what you're saying is that the APR of actual banks can be very high, right? So this is, I think, very important to highlight. So here, I mean, in the example over here, it's 34%. Right.
That's right.
And that's because everything is just sort of adding up and there's a lot of hidden fees in all, right?
That's right. So let's take an example of our structure. Let's say you need the capital for 30 days because you're expecting sales, or even 60 days. And you're going to use those sale proceeds to repay us, which means you're paying a service fee, which is 2% per month. If you use it for 2 months, you're going to pay 4%. Under the banks and fintech structure, they're giving you a loan for 12 months, which means you have to pay the full 2% per month for the full 24 months, or 12 months in this case, so it's 24%. But in addition to that, you're paying another 5% origination charge, which means your annual percentage rate for a 12-month loan becomes 34%. Now, if you used a month period, it'll only be the 24%. Right, so it's very clear, very transparent. Now, because the loan is not outstanding for the entire 12-month period of time, it means you're only paying for when you use it. So if you use it 5 times in a year, you're going to pay 10%. 2 times 5 is 10, right? 6 times 2 is 12. So whatever your usage is, that's the interest charge that you'll be paying. So you're never committed to having to pay ongoing interest for something you're not using.
Right. I think that's one of the biggest advantages of CrediLinq and one of the biggest USPs compared to banks. All right, let's keep going.
Yeah, absolutely. And I think this is another great USP is that it's hassle-free. I mean, ultimately, I'll go through the walkthrough as to how you can access us, but it's really about using your Amazon credentials, giving us access to your data, and then receiving an email offer within a few hours. We go through that user experience because then you deeply understand how simple it can be, that you're not pulling out things like bank statements and financial statements and then waiting months and months to get capital. And then, of course, it's really ensuring that, you've got the money when you need it. So you don't have to think about pledging your house or giving your car as security or opening up another bank account that you didn't really need. So we do try to take out some of those pain points that we've heard so many global Amazon sellers talk about. And then, as I've mentioned, transparency, right? We've just gone through that fee piece, Megla, that you just mentioned. Single service fee only on the funds that you use. And it's clearly written when you're using the capital. So you know how much you need to repay as a charge. Yeah. Now, this is the other USP. One of the things we've been able to do using huge amounts of data and to process it really, really quickly. And that's at the heart of the decisioning process. That when you can actually create a data pipeline, and it's a little bit technical, but we do use the term artificial intelligence here, is that you're able to use all of that historical data to create future prediction to understand the client, right? So your time to decision is really, really quick, and your time.
Just excuse me, my headset just failed. Let me just swap the sound. Can you hear me okay?
Yes, now we can.
Sorry, excuse me, the headset just lost power. No good conference is complete without a technical issue, of course.
Yes.
So if people are interested to learn more, there's a couple of ways we can help serve you. One is, how does the process actually work? And it's about us having access to your Amazon store data, getting that approval in principle really, really quickly, providing us with things like KYC documents, which is mandatory under regulations, and then being able to get access to your capital. So let's go through how that actually works. Now, in this case, we do give credit lines up to $2 million. We have done more, but the sweet spot is a maximum of 2 million now. And to the same extent, we've done as low as 5,000, 8,000, 10,000. So our solution is available to everyone. You don't have to have millions of dollars worth of Amazon sales to be able to access us. In fact, we support more merchants that have a volume less than $500,000 than any other segment. So you can actually really access us regardless of your size and scale. Now, one of the things we ask for is that you've been on Amazon for at least 3 months. And why is that important to us? That's important because we want to see the ramp of your product, and we want to be able to see how you're performing as an e-seller. And then, of course, the monthly turnover minimum of about 100,000 US or equivalent currency. The reason that's also important to us is we want to see what the sales data looks like and what the unit economics or the income you're making from those 3 months of sales of at least $10,000. So we understand that your product is highly scalable as well. Now, I'll skip this slide because I've already mentioned that we don't hide any fees. So there's no processing fee. There's no interest rate. The interest rate is just the service charge. There's no disbursement origination fee either. And I'm assuming, Megla, everyone will have access to these slides for later review. Happy to circulate.
Yes.
Brilliant. And then, of course, we are running a promotion right now. So we've embedded a code here, which is ISN. And this is really allowing Amazon sellers who you work with access to capital with rebates. And we do it on the second drawdown. And why is that important to us? It's because when we go ahead and work for a client for the first time, we want to see repayment behavior. And then, of course, we reward that repayment behavior by providing rebates on your second drawdown. And of course, the more you borrow, the greater the rebates. So you'll be able to get a $1,000 US cash rebate against a loan that you may take for up to $1 million. And of course, $150 rebate for loans between 25,000 to 100,000 US. So that's available exclusively to your viewers. The terms and conditions are there. I won't go through them. Sorry, was there a question?
No, keep going.
Sure. So this is how the terms and conditions are structured for that rebate. It's, of course, for your viewers to use that code ISN. You need to make timely repayment on your first drawdown. You need to be eligible. And then, of course, the rebate is given after the second drawdown has taken place, not before. These are some illustrations. I'm not going to go into them because I'll describe a couple so people understand what they really are. But this is in reference to if you're borrowing $50,000 550,000, 1.5 million, 2 million, how much do you actually pay in fees at that 2% charge? And then what's the rebate that I can actually earn in terms of cash rebate on my second drawdown? And it's really to say, you know what, if you're borrowing for 60 days and you draw down $25,000, we know your service charge is going to be $1,000, and that's all the fees you pay. More importantly, when you come back again and you want to borrow $40,000 for 60 days, what are your fees? But we'll go ahead and provide that rebate, so your fees actually go down immediately. And that's true regardless of the amount that you borrow. And then, of course, if you're ready to apply, let's go through it. There's two ways of doing it. One is you can come to our website and there's an Amazon sellers page where you can click apply now. This will redirect to the Amazon seller app store. Of course, if you're already within the Amazon seller portal, you can go to the Amazon seller app store and you can find us under that listing and you can authorize now. Now, what happens when you press the authorize now button is you need to put in your Amazon credentials. At this point, we don't have access to your username and password. You are now within the Amazon environment, and Amazon is authenticating your username and password. Once they do that, they'll take you to an account, which is going to be a CrediLinq account. That account is going to ask for access to the marketplace that you want to share data for. So in this case, we'll take US as an example. So you are giving access to your US sales data to CrediLinq. You can proceed. It's very clear the data that we're looking to access. So it's all the selling partner insights, it's the fulfillment data, the pricing, the product listings, the consumer feedback. Once that's done, a form will pop up, which allows you to put in your business name, how much you want to borrow, and for how long. That's the opportunity for you to be able to place the promo code for ISN, complete the form, and that's it. That's the entire process. And what's happened on the back end is all of that data has come across to us through our connection because we are embedded within Amazon, and it's run through our technical infrastructure, and we've made a decision which we communicate back to you on email. And it's as simple as that.
Are you there? Okay, so that's the last slide, right?
That is the last slide. Happy to take any questions.
Cool.
I can go back to anything that you want to go deeper into.
Yes, let's just see. So guys watching, let us know if you have any questions. Type them in the comments. We'll be taking questions. And apologies for my dog barking in the background. He's going berserk.
Well, he's excited. That's why I'm glad.
Yes.
He wants to borrow some money.
Absolutely.
I went in on the action. Okay, so we had a couple of questions. So first of all, what's the effective APR? So, I mean, is there any way to define the APR or not really?
Yeah,
there's so many factors.
As stated, I'll just go back. So this is a real example. Our APR is 2% per month. So if you're going to use us for 2 months, it's 4%. If you're going to use us for 12 months, it's 24%. The maximum APR you will have with us is 24%, which is 2 times 12.
Yeah. Okay.
Which is virtually as cheap as a credit card.
Correct, but the benefit is that you can repay it, and once you repay, you're not paying any interest, right? Yeah. So absolutely, you're right.
And you can't probably get $1 million credit card either.
Or 2 million.
Absolutely. No, it's a great question. Of course, I think that question also comes from a place where people are a bit fearful of what's my APR really going to be, because they're so used to seeing hidden charges. And that really frustrates me, because I think the user experience can't be one driven by fear, right? It has to be driven by transparency. So the maximum APR you will ever have with us is 24%, and that's based on you using it for the full 12 months.
Okay, this is a long question. This was by Bharat in our group. MCA revenue-based funding or long-term funding. It's interesting everyone provides only MCA while businesses need longer payment terms. Revenue financing ensures it sucks the cash flow out for servicing.
This is one of the best questions I've had. I've spoken to thousands of merchants, and this is the best one. And I'll tell you why. Merchant cash advances are designed to take a percentage of your sales every month. And the bias built into merchant cash advances is that if you go from $100,000 sales to 500,000 to $1 million, and you've borrowed 500,000, those that are scaling rapidly are going to pay that merchant cash advance down really, really quickly, because the percentage of sales is going to be really large when you're doing $1 million. 10% of $1 million is 100,000. 10% of 10 million is $1 million. So you're going to pay down $500,000 really, really quickly. Where merchant cash advances actually hurt, it's about 80% of the market. They hurt 80% of the market because you're never going to be scaling as a hockey stick. We're trying to grow long-term sustainable businesses, so they can't be built off hype. So ultimately, those that are on a steady trajectory of growth actually get punished the most, because as you're growing, you're having to actually pay more and more money out of your sales to service the MCA. And that's also why we designed the product that it is, that the merchant cash advance prones itself to be short-term and preference towards those quickly. Our product is designed equally for all. And why is that the point that I'm trying to make? It's really focused on, if you need the capital longer term, it's available to you, and you know exactly how much you're going to pay without determining whether your sales are going up or down. You don't have to be fearful that you're going to have excessive cash flow going out like you would under an MCA. And the other element is it's highly predictable. So therefore you can model it into your cash flows. When you see on the screen that it's going to be 2% per month, and this is the dollar amount that's going to go out every month, you can now use that intelligence to put into your own cash flows to manage your business effectively. Great question. I loved it.
All right, Bharat, hope that answered your question. So let us know if you have any more questions in the comments. I think the other thing that I want to highlight, and I'm just going to go back to that slide over here, which is the countries. So a lot of the other solutions that are available out there, and they're similar to CrediLinq and different, but most of them are based in the US, and they only cater to businesses that are established in the US or Canada. But what I really like about CrediLinq is, as this is a really good tagline, sell globally, but get funds locally. So these are all the different countries that are supported. And are you going to be adding more countries down the line, or, how does this work? Is this it?
Yeah.
Or?
No, that's just the start. And we are going to be adding more globally. And it's really a function of where the merchants are. We've seen, interest for our product across most of Europe, places like Italy and France, out of Ireland, out of Sweden. We've seen, skin care products coming out of Sweden saying, hey, can we please use you? And we're in the process of establishing that as well. We've seen a little bit come out of India as well. So we're in the process of adding more markets, but these are the more prominent ones that we've been focusing on over the last few months.
Brilliant.
So every Amazon seller worldwide, if they want to scale, we all have the same problems. Even if we live in Timbuktu, we all have that same problem. Ultimately, that's scaling. Yeah.
Spot on.
Exactly. Now, how do sellers generally use the money? I mean, does it really matter whether they put it in marketing or whether they use it for inventory, or, does it really matter, or does it not?
Yeah, that's a brilliant question. We are agnostic to how you use your capital, because you know your business the best and you know the levers that are going to drive sales. Sometimes that's marketing, sometimes it's restocking of inventory, sometimes it's just general working capital. So we're agnostic to that. What we've seen most prevalent is restocking periods. So it's things like, oh, Valentine's Day is coming, and I happen to sell things associated with Valentine's. In fact, the biggest one we've seen is actually Halloween in the US. People start buying up a lot of lights in September. So those that actually sell lights end up having to find and scramble for money because they've only got that 1 week period that they can actually go ahead and make a huge amount of sales. So we're agnostic. Where we've seen the most prevalence and use of funds is in inventory restocking.
Okay, got it. I think the other thing is that you're not only, it's not only the large, well-established sellers that are using CrediLinq, it's also the smaller guys, right, who are just trying to scale.
That's right. I mean, our average limit is about 80 to 100,000 US dollars. And we've done loans as small as $5,000 to $8,000 in places like Australia and Indonesia, but as large as 2 million in places like the US. And really, we understand that people are going to have different pain points. And all it proves to me, Megley, is that regardless of your size, you've still got the same pain point, right? So that's exciting for us. Regardless of where you're sitting and how big you are, you're facing the same challenge. It means our solution actually caters to that.
Yeah, absolutely. And also the fact that the time to loan decision is less than 24 hours and then cash can be available within 48 hours. I think that's absolutely incredible because, I mean, what happens if you go to a bank, right? I mean, Mark, you were in finance, right? So what was the process if somebody went to a bank to get a loan? What's the process like?
It can take weeks. And I think the biggest thing I find is like now, if you're starting an Amazon business and you've never, you've just been a worker before on payroll, and so you've started up a company and you walked into one of our banks and said, oh, can I have, $50,000 or $100,000? They're going to say, show me your last 2 years paperwork at least. And then, if you want 50,000, what security have you got? You haven't got, it's not like you can put the car up. So they're not going to take your Amazon stock. So, how do you get that 50,000 unless you can, have a clear mortgage on your home, or you have lucky enough to own a home that you can do that, or you have to increase your mortgage somehow. And it's all, once again, there's money and money and money. Every time you go to the bank and ask to do something, they want a fee of, $300, $400, $500 just to say hello. So I think all that is so much beneficial, not just for the bigger sellers, but for those who have, started off, maybe been going for 6 months or something and think, gee, now I'm really struggling because I need to get more stock. And at least then you don't have to go and show the history. All you need is those Amazon sales. You don't have to prove anything else. So I think that, that is probably the biggest winner for the smaller people just starting off wanting to scale, and anyone who's been running for a while, it's going to be a no-brainer because you can get quick cash. And it's not that you have to pay out a $2,000 application fee and sit that money aside in case you want it. You can just, once it's approved, you can sit there and it doesn't matter if you don't use it. It's just there, ready for you in case. So, it doesn't mean to say, that you have to keep borrowing it all the time. You can save it for a rainy day, I suppose. Is that a good way to say it?
Yeah. I think the other trick is that everyone actually should apply and get a limit set now, because then you'll have it available for the whole year. And when you need it, it's there for you. So you don't even have to worry about going through an application process because it's been set, right? So, that's pretty exciting to be able to say, you know what, I've got this opportunity to draw down on that capital when I need it.
And in most instances,
look at the people that come on a trips with us. Sometimes you can see, in when we talk to different people, I wish I could afford. I've just seen some great products. I wish I could afford to go and sort of buy them. But if they did have access to the capital and they knew what they were beforehand, then if opportunity comes knocking, at least you can explore because you've got funds available. I mean, it makes sense, yeah. There's no point looking if you've got no money in your pocket, so to speak, or you've then got to go and find funds to do. By the time you go through all the paraphernalia, opportunity may have flown away.
No, that's a brilliant point. I mean, just to share an example, we've had some merchants in places like the US where they started selling bicycle helmets. Now, why do you need a bicycle helmet? It's probably because you've got a bicycle or a scooter or some sort of skateboard. So capital can allow you to go into adjacent products. So they started with ride-on scooters, then moved to skateboards, and now are actually doing high-margin bicycles. And that's a great way to start thinking about your Amazon store, which is what are the adjacent products you could actually start selling if you had more capital, right? Because, of course, if you want to sell high-end, high-margin bicycles that are $1,500 or $2,000 US, you need a hell of a lot of money to be able to acquire them in the first place. But when you're starting that Amazon store and that Amazon business, always think about product adjacencies that are going to allow you to expand your margins over time as well.
Yeah, totally makes sense.
For sure.
And in terms of the criteria, it's $10,000 of sales per month. And do you need any history of it?
3 months worth.
3 months. Okay.
Right.
That's not bad, actually. So you have to have some consistency in sales, but $10,000 per month is nothing, basically. I mean, once you're selling a couple of different SKUs, it's easy to get to $10,000 per month.
Correct. Yeah.
And it's basically the same system with any third-party services or what they the SaaS services for Amazon. It's the same sort of process of you only give the information that we want to give CrediLinq. It's not that like they're taking power over your whole account. There's only certain parts of the account that's privy to CrediLinq. Right. So it's quite a simple sort of process and a seamless process by the sounds of it.
Yeah, that's a great one. Let me just reiterate that, right? When you're authenticating with your username and password, you're in an Amazon environment. You're not in a CrediLinq environment. And that's important because you've already built trust with Amazon as a brand and as a company, and hence why you're working with them. So they're controlling that flow of data to us, right? So I think that's really an important point, Kevin, that you raise, that your privacy is absolutely respected and only the data that we need comes across.
Yeah, excellent.
And also, I think, to do any other finance, you're more than likely going to have to engage your accountant and get the current, profit and loss and everything else. And there's another $5,000 before you start just to get the updated data from the accountant and all those things. So, it's free. Amazon just provides your current data to you with no charge. So they just give you access to that. So to me, that eliminates all those costs that you forget about when you're doing a loan, because if you have to go off and get your books, get the bookkeeper to do your books or your accountant and provide all that stuff, it's going to take weeks to start off with, and it's going to cost you. It's not free. Nobody will do that for nothing, and then give it to you, along the way. So I think all things are just a really win-win for people.
That's a great point. To share an example of my wife, she runs a physiotherapy clinic here in Singapore. And when she wanted to expand her clinic and needed some capital, we went through that exact process, which is, okay, here's 2 years worth of audited financials that we've got. And by the way, the last audit was 5 months ago. So we went to the bank, we've submitted our documents and said, but this was 5 months old information. And we said, well, you've got access to our bank account, so you know all the inflows and outflows. And they actually asked us to give them management accounts on a monthly basis for the last 5 months. Now, my wife adds her own data into Xero. And when you're a physiotherapist and seeing patients and clients, you don't always have time to add all of your data into Xero, right? So you're generally 1 or 2 months behind. Now you've got to spend a week or two to catch up your Xero accounts for the last 5 months, and then you're going to go back, right? You've already lost 2 or 3 weeks just in that process. That doesn't even include the application fee you need to pay, and then another 1 month for the actual credit review.
Yeah, I think all those things just make it so much simpler for people. And I've heard people say, they've gone into a bank and said, I sell on Amazon, and they go, yeah, well, we're not lending. We don't lend money for Amazon loans. We just don't do that. So I think a lot of people have really, really struggled in the past because they couldn't go to their local financial institutions and get any money because it was Amazon. So I think, this is another way of getting some quick money that you don't have to take. It can be sitting there just for, in case you need it, and, in case, you all of a sudden something takes off and you need to do a big order. Or I think Q4, you're going to be run off your feet in Q4 because everyone's going to want money for, sort of September, October. So that should be the time that people would be, using that drawdown for that time. And then as soon as, your Amazon Christmas is over, you can pay it back. I mean, and if you decided to take, say, I don't know, $50,000 and you said, I'll take it over 4 months, but you had the cash in 2 months, you can pay it out, can't you, and not pay the extra fee? Is that correct or not?
No, so the way it works is you choose how long you need the money for.
Right.
So if you're choosing for 60 days, you keep it for 60 days. Of course, if you choose to repay earlier, you've already paid the fee. So it's actually in your interest. Yeah, exactly. So the fee is paid up front. So it's in your interest to use it for the 60 days.
Okay.
Right? But of course, it's a convenience, right? And the point you just made, Margaret, also goes back to that element of fear as to what is the APR. Because you don't have that option to walk into a bank and have a regulated institution give you very clear information as to what the fees are going to be, you end up in a pretty gray zone. You end up with payday lenders or fintechs who aren't regulated, who have hidden charges and fees. And that's pretty scary because ultimately, people are trusting you to support their business, and yet it's not really a quid pro quo relationship there.
Now, is this only for Amazon in terms of the marketplace, or can Etsy sellers and Shopify and Walmart.com, that's an up-and-coming marketplace too, right? So, yeah.
So we are expanding. So we already do things like Shopee and Lazada and TikTok Shop out of Asia. We are working on an integration of Shopify, Etsy, Walmart. We've already mapped their APIs. But ultimately, we can support e-commerce sellers. Now, the process at which we get the data is going to be a little bit different. In this case, you're going to be downloading your historical data from a place like Shopify or Walmart, and then you're going to be sending it to us in CSV. It runs through the same models, gets the same output, and we come back to you. Now, that's because we're not implemented within those marketplaces. Shopify is a great example because they don't allow you to, right? So, there's different ways to work with marketplace sellers. It's just that the transfer of information changes a little bit.
That's good.
Yeah. Yeah, I mean, if you're selling on multiple channels, which a lot of sellers do now, I mean, that I think will be an added advantage because let's say you're not doing $10,000 on one marketplace, but if you add up your sales on all different marketplaces and it comes to $10,000, that would qualify somebody, right, for the loan, or is it $10,000 per marketplace?
No, we keep it as per marketplace because that's super critical. Because what ends up happening there, Meg, is that you end up with very different data sets. The data that Walmart, Amazon, and Shopify store is very, very different. So it becomes really challenging for us to provide you the USP, the service proposition, if it's really disjointed and really granulated across several marketplaces.
Yeah,
that makes sense.
Yeah. Awesome. So, I mean, Adeep, thank you so much for joining us today. We don't have any questions. Looks like you have addressed all of the questions, and we've given a very comprehensive presentation to people over here. So, guys, we're going to be on for a couple more minutes. Let us know if you have any questions for Adeep or any comments, or what do you think of the service? Do you think it's useful? Is this something that you will be able to use for your Amazon business? Let us know. Type in the comments. I see quite a few people watching, but people are quiet today.
Well, like Deep said before, even to have that, make sure you do see if you do qualify for that line of credit. That if you do need it, in the future, you can use it. There's no harm in sort of doing that. Just to know that you've got it if you need it.
It lasts for a year. Is that right? Once you're approved, does it last for 1 year?
The limit's available for 12 months.
Yeah.
12 months.
Yeah. So that's
and then
good.
You can, of course, apply again for the next 12 months. Brilliant. Well,
Really.
yeah, amazing. So, yeah, Deep, thank you so much for joining us and talking about CrediLinq. I'm sure a lot of our audiences, will be interested and will hopefully reach out to you or sign up on CrediLinq.ai. So, yeah, thanks a lot for joining us today, Deep.
No, it's a pleasure. Thank you for having me.
Thank you,
Thanks a
Dave.
lot.
Pleasure. Great information.
Thank
See you later.
Bye.
Great
Bye.
service.
Oh, he left. Okay.
I was going to have a chat.
Yeah, we said our byes. So,
We're still live.
yeah, well, yeah, we're
That's,
still live. Let's just chat a
yeah.
couple of minutes here.
Yeah. So that's a really good service. For I wish that was around. At times when we've been scaling. In the past, and we,
Yeah.
sort of, funds. Funds just weren't available like that. And sort of things just weren't there. So it makes a huge difference to know and how easy it would be to even get the loan.
I mean, you've just got to have
Get it all
a
in
business
place.
doing $10,000 a month. That's not much to ask for, really.
Yeah.
So, once you get your business doing $10,000 a month for 3 months, you can borrow, some money and I don't know, I just think now, because it doesn't cost you anything, why not do it? Why not get it set up? And then in case you need some money, as Megla said, if you get a product that just takes off, you can, do it with, ease. Then you don't have to try and find money.
Especially like seasonal products. That's because with seasonal products, once you get everything in place, I suppose, what your numbers could possibly be, but you'd struggle sometimes to get the inventory sort of in place without, putting your house on the line, so to speak.
Things like Valentine's Day and Halloween and that. I mean, you've really only sell probably 2 weeks, at the time. And so you need all that stock in for, most of the, it's not spread out over the year. You've got to have the money for that in one hit. And then you're going to get your money back. So, I mean, to me, those, especially people looking at or who do seasonal things, for Easter, Mother's Day, even Mother's Day and Father's Day. I mean, all those things where, you have a product that really takes off in that time. This would be such a help to them, I think. So it'd be really good.
Absolutely. Yeah, totally agree. Cool. So let's wrap it up over here. And we are going to be sharing more information about CrediLinq in the group and also sending out emails. The slides will also be sent out to the email database. They're also offering an ebook in case anyone's interested. We didn't really talk about that, but where's the link? There is a link somewhere. Okay, I lost it. It was here.
If you put it on the screen, I've seen it go across.
I did, right? Oh, here it is. Yes. So go to bit.ly/CrediLinq to get a free ebook on Amazon financing. So that's just all of the different options available for Amazon financing described in that ebook. Cool. All right. Thanks everyone for joining us, and we will see you on Friday morning in Australia and Asia, and Thursday evening in the US for a live stream with Global Sources to talk about their upcoming Vietnam trade show. So we'll see you on Friday. Thanks, everyone. Have a good day.
Bye, everyone. Bye.